Peace, everybody. So, got a bit of a different type of video today. Um, Instead of doing swing reviews, I'm going to be giving my prediction for 2025. I got some pretty good data, some statistics, what I anticipate, um, just based on how things are looking. I'm seeing a potential bear market, recession, or at the very least a correction. I'm just going to simply take you guys through my analysis, my thesis, and also some statistics that I have to kind of support my thesis, and just kind of what I plan to do going into next year. So um, I don't want to waste anybody's time much more. Let's get right into it. So reason number one, um, well, first off, I must say I am anticipating a bear market slash correction next year. So, what is a bear market or a correction? So, um, a correction is a 10 to 20% drop in the market. A bear market is 20 plus percent drop in the market. So I'm expecting between a 10 and 20% drop in the market this year. And and early this year. This is what I'm expecting. From a technical level, from a political level, economic level, it's a lot of indications kind of pointing towards correction at least. I mean, at least a correction. Um, I believe the market is overvaluated, and it needs a healthy correction. If not, maybe a pullback slash recession. Recession wouldn't surprise me either. Um, so let's get into it. So on a technical level, first, let me get rid of some of this first. So first things first, we got a falling wedge here. A falling wedge or a bearish rising wedge, however you want to call it. So let's go to that. As you can see, or excuse me, rising wedge. Rising wedge, excuse me. So you see here, you see these lines here, how it looks exactly like SPY. Then you got a breakout of it, which was here when it broke. Let's go to the 4 hour to see so you guys can see it better. So you got a rising wedge here, and then you got a break of the wedge. Once it hit here, it broke the wedge. Once it did that, it broke the wedge. And then you see breakout confirmed on the close, a confirmation it closed. Excuse me. Breakout confirmed on close below support. So once it comes here, this is now support. Once it breaks, this is the close of support, as they mentioned here. It comes back and retest, as you can see. Came back, gave you a little retest here. And then, well, I guess you can see a little bit more on a smaller time frame. It actually didn't retest. It kind of just broke. So this is support, and it just kind of blasted through here. Like it gave you no retest. It just kind of broke. So once it broke that falling wedge, it was off to the races. So we got a falling wedge, which is a bearish pattern. One, and this is something that I don't see often. We have two bearish patterns, high probability patterns. Actually, two of my favorite patterns happening at the same time. So not only did we get this rising wedge pattern here, we also got a head and shoulders pattern, which is my personal. Usually the inverted is my favorite, but head and shoulders in general is my favorite pattern. So you got the left shoulder, the right shoulder, the neckline, and the head. So you got a rising wedge directly followed by the head and shoulders. I mean, that's nasty work. I'm gonna be honest. That's nasty work right there. It's real nasty work. Um, Two patterns right there just developing. Also, market's currently in 12. It's 12 o'clock right now, so market's still open. But wanted to get this video out to you guys. Um, Currently in some puts to let you guys know that I'm following my prediction. I'm not gonna get into that in this video, but I'm currently short in the market. Um, let's see, a 10% dip from here would be just a correction, guys. Would be about here. If we got a correction again, it will be here. So you see, we got a ways to go. If we do get this correction, a lot of ways to go, a lot of levels to break, and I'm anticipating something more so like here, which this is more so like 20% bear market type recessionary numbers, and I'll show you guys that too. So that is for it to come here. This level of support here is about 16%. Right. I'll need you guys to look at this number here. The percentage. This is the percentage drop from the all-time highs. So I may be off a little bit. Just kind of let's say boom, and so you see about 16% drop. Or it can come lower. We'll see. We'll see what happens, but that's what I'm predicting. That's what I see happening. Um, Falling wedge followed by head and shoulders, followed by um, we got a changing of the guard as far as presidency goes, so political matters. New, not only political as far as president, but new senates, new House members, changing of the guards, crypto being now in the equation. The economy's not at its best. Interest rates are going to lower. A lot of things happening at once that I won't get into everything, but a lot of indicators pointing towards a potential bear market. Um, Also, I want to show you guys how the way that the market reacts at the beginning of the year, how that sets the tone for the year at hand. So I want to got some. So here, I want to show you guys when the market, how the market reacts in the beginning of the year sets the tone for the rest of the year. So you see, off the rip, January last year, off the rip, we got ourselves a bullish engulfing. I'm going to show you guys that. So off the rip, first week of the year, or first 2 weeks of the year, we got ourselves a bullish engulf here. And you see this one bullish engulf set the tone for the market to rip all the way up until March. So 3 months of straight bullish price action off this bullish engulf. This set the tone for 3 months of bullish weeks or bullish price action with no pullback. 3 months. Just one bullish engulf. This is what I mean by the beginning of the year sets the tone for the rest of the year. So this was top of this year, 2024. This bullish engulf set up the foundation for what we got this year. And we're talking the market went up 30%, about a 30% increase this year in market price. Market is up 30% on the year, and this bullish engulf set the tone. Now let's go last year. Now last year, not last year, 2023, same deal, guys. This ain't random. So the market doesn't exactly do the same thing every year, but it rhymes. So it came out the gates with a bullish candle. It came off these lows here, right? Came out with a bullish candle, another bullish candle, bearish candle, but followed with a bullish engulf here, as in this candle engulfs this candle, and it gave you a slight little, not even a pullback. Actually, it did. It gave you a bit of a pullback, but it came to about where the year opened. The yearly open um, came back in about March, and then it was straight gas from there. It just went up from there. So last year it came out strong, gave you a little bit of a pullback, and then took off from there. And then you see from there it just was off to the races. But 2022, which was the bear market, which was the last time we actually had a bear market, 2022. You see how you got a bearish engulf. Boom. You got a bearish engulf to start the year. And then that set the tone for the rest of the year, as in it dropped 20, I think it was like something like 30% from the low. 20, let's see, 27% from the highs. It got as low as 27%, which is really recession numbers. They didn't call it a recession, but it was really a recession. But that's what I mean by these top of the year candles. It sets the tone for the rest of the year. So this next these next couple of weeks are going to be super important in seeing how these candles set up for the rest of the year. You've seen twice where the candles let you know 2 out of the last 4 years. We'll go to next. What's this? 2022. We'll look at 2021 too, but the yearly open candle literally told you the direction of the market. Bearish engulf goes down. Bullish engulf goes up. And let's peep 2021. Let's see if we got like a little pattern here. See. See January 2021. Boom, right here. So sometimes it happens the first week. Sometimes it happens the second week or the next month. So 2021, it didn't give you that initial pop, as in January. This is a engulfing candle, so this is a bullish sign right here, letting you know. So the first week we got a bullish candle. The next week we got a. This is the weekly chart, by the way. Um, that engulfs a bullish candle, but the next was a bearish. But this bullish candle is still a bullish engulf. It's just the bullish candle is before the bearish candle. So but regardless, still a bullish engulf. And I think this one really kind of set the tone. This one's a lot stronger. That candle kind of set the tone for the year more so than the open. So it took about till February to kind of give you like a strong direction, right? But again, the beginning of the year, the market doesn't always do the same thing, but it always rhymes. So it didn't do it. It did, but it gave you a stronger confirmation later. Like this is a strong bullish engulf here. and that from there on, it gave you like a little pullback here, and from there it was off to the races, off to all time highs. So I'm paying close attention to how these candles close on the weekly and the monthly on these higher time frames at the beginning of the year to let me know how to play the market going into 2025. So I'm paying close attention. I believe the beginning of the year is extremely important and imperative time to see how it comes out, especially with new presidencies. Um, crypto again, the crypto. I think it's very important this next month or two just to really evaluate the market to see, because what the market does this next month is really going to tell you, set the tone for how the entire year goes. So I'm paying super close attention. Again, I want to show you these statistics. Um, the last thing before I go, show you some of these statistics. Again, pullback 5%, 5 to 10%, a correction 10 to 20%, bear market 20%, recession also 20 to 25%. But that's more of an economic thing than a bear market. Recession on a numbers wise are pretty much the same thing. The only thing is the economy feels it a little bit different when a bear market, like 2022 bear market, we didn't get a they didn't call it a recession even though it really was a recession type of deal, but that was more of a bear market. A recession is more so like COVID, the Great Depression type of deal. So yeah. And also, last thing before I go, how frequently does these things happen? So you get about 2 to 3 pullbacks per year. You get about 1 or 2 corrections a year. Bear markets happen 5 to 7 years, and a recession happens 7 to 10 years. So I wanted to give you guys some of those statistics before I went, just kind of educate a little bit and kind of give you guys some of my research data that supports kind of like what I'm looking at. I'm going to be on the charts heavy just to see how we should play these markets going into the 2025 so we can make some money. I got some personal financial goals that I want to hit this year. This is going to be a really big year for me personally. So want to put out this prediction and yeah, see you guys next week.